With the way that the insurance prices have gone up and skyrocketed, we've been having more conversations around how to save money, how to get the best deal on insurance, and what coverages should you actually carry. And I'll link a video at the end that goes more in depth in some of those pieces, but the question that you should ask yourself is, when is it a good time to lower the limits or the coverage that I have that makes sense financially? We're going to discuss the 6 ways to lower your car insurance and when you should change the coverages and the limits you should have. And at the very end, we'll probably go into a little bit more in depth on actual coverages that I would lean towards that's going to be the most impactful on your policy. So how do you save the most? How do you transition into what's a higher premium? If it's unaffordable, what are the options we have? And in general, if you don't need extra coverages, let's start to find out whether you should or shouldn't make some changes to your current policy. The first way and the first reason that you should lower your limits or debate about lowering your limits, it's honestly never a bad thing to have more insurance. It costs you money, right? So you outpay a little bit extra, but you always know you're covered, right? So that's the benefit of that. But if you have fewer assets than you did previously, we're not all winning at life. I'm one of those. I'll go on a gambling app every once in a while and spend $20 on Crazy Time, it's called, and it's gone in 5 seconds. It's like I lost it. That can happen with the financial market. That can happen with investments. That can happen with your businesses. All of the things that could have changed, change. The value of your vehicle goes down every single year. So that brand new 2025, whatever you drove, is now 5 years older and it's not holding that value anymore. When you have less assets than you have insurance, you don't necessarily need that extra coverage. And that leads into the second one, is when you have a lower end vehicle. Right now, it's usually 15 years or older. People stop carrying what's called full coverage. It really is comprehensive collision, can add road service and towing depending on what your idea of full coverage is. But in general, having the lower coverage, removing the comprehensive and the collision from a policy, typically is several $100s depending on your situation. If you're the average consumer that's paying anywhere from $2,500 to $3,500 a year, then having less coverage there is going to be impactful. Now, I'm not saying that everyone should just go out and remove your comprehensive and collision from your policy, because if you get in an accident and you can't afford to fix your car or you can't afford to purchase a new car, then it makes more sense to have a $500 or $1,000 deductible and have it covered so that if something does happen, you're not stranded. You at least have lost some. You're going to lose your deductible. And if there's some negative value or the car that you want next is more expensive, you're going to have to pay the extra cost. But if you can't afford it otherwise, then it's not worth removing either way. The third is if you have a strong emergencies fund. And this one is a little bit gray area for me, because having a strong emergency fund is great and is important and is almost needed right now. If you've built one, it's starting to depreciate now because you're spending it on all of the cost of food, the cost of repairs, the cost of living, the cost of insurance, and all of the things have increased, and it's probably taking from that emergency fund. If you have a large fund and you've got probably more than you need, there's a couple things that we should look at. Okay, again, do we need full coverage on our cars? Do we have to have higher liability? All of those pieces. The biggest piece I would be scared of and a little bit more focused on is actually adding a little bit more coverage to your liability. When you have that extra money and it's not in a 401k and it's like an investment and it's available, people can sue for that. And when you have a major accident, if you don't have the right liability coverage, they can take that emergency fund and it pays for their medical or their injuries or whatever the case is, and it helps them survive, but it leaves you with nothing. So you've built years and years and years building this emergency fund and it's gone in an instant. Having the right liability or an umbrella policy will help protect something like that. That lets you go off and change the coverages on your car, change the coverages here. There are other pieces that you don't necessarily need, and if you're going to repair your own car or going to replace your own car, then you don't necessarily have to have that additional coverage there. Number 4 is the unfortunate part, is budget, right? If you can't afford insurance, I'm talking to a customer the other day. We raised the deductibles, we took off an umbrella policy because it just wasn't needed anymore, at least with their 401, and they're retired and they're 80 some odd years old. So like all of the things, like in general, don't get me wrong, every agent under the sun is commenting, you always need an umbrella, right? I get that, but finances, it's unaffordable. And when that happens and your umbrella doubles and your car insurance goes up 30% and your home insurance goes up 50% and we shop it around and that's still the best deal, at the end of the day, you have to have some way to pay for it. When those things happen, there are pieces that we can look at, right? What is our liability risk now? Because for them, they didn't have as much to risk going forward. Also the deductibles, again, we're changing the coverages to match what they need and what's gonna fit. Just reviewing the policy in general sometimes helps, because us just going through and updating the mileage, updating the house, updating all the coverages saves you several $100s in most cases if something's changed. So we find out you have lower square footage than we thought. You drive less miles. You're willing to do a telematics and get a bigger discount there. There's all of these pieces that an agent can help you get the best deal, but looking at what you can afford also plays a big factor. By the way, if you are shopping for car insurance or home insurance or business insurance, in general, we do a lot of trucking, home, auto, all the things. I'll put a link in the description below where you can fill out a quote, talk to a live agent, they'll shop multiple companies, kind of give you some options available for you. The fifth pertains to auto specifically, is if you drive less miles. Let's say you're only driving 100 miles a week, which oddly enough was the case that we just had recently. And if that's the case, then the liability risk is very low. If it's inexpensive, so you've got to have the agent play with the numbers. I spent a few hours with a customer the other day just adjusting this, adjusting that, because no one person is the same. That's why when you hear the story, my neighbor pays this, it's a completely different scenario. Different car, different credit, different person, different drivers, different risk, different tickets, different, all of the things. Yeah, the zip code's the same and the house might be similar to yours, but they're a completely different profile. Going through and saying, okay, well, how much is the liability risk for this profile? How much is the comprehensive risk for this profile? And that's what determines the pricing based on that. Once you've found the company fit that we want to have you in, now we can play with the numbers a little bit. But rarely driving makes a huge impact with a lot of companies right now, because if you're not on the road, you're not a risk. And if you're not a risk, still the liability is the most important now, because you're not really risking your vehicle, but having the better liability to protect your assets is more important than protecting the car or protecting all these extra things that come with packages and different things that I personally carry and I think is important to me, but it might not be that important or impactful for someone that doesn't drive much. There also are programs. One of the companies that we work with is Nationwide, and they have a Smart Miles program. A lot of companies have similar, where you pay a lower fee, a lower base rate, and then you pay per mile. So your policy is never the same from month to month. It's based on the mileage that you drive. For those that know you're not going to drive many miles at all, then you have that option. And then if you decide you're going to drive a lot later on, you can take that Smart Miles off and then switch it to a standard policy. Now you can just pay a normal rate and not have those ups and down months. The sixth is if you have other forms of protection. If you're protected elsewhere, that umbrella policy's kicking in and they let you lower the liability limits, you've got $1 million here, you only have $500,000 in assets, like your income is 30, 50,000 a year, and you're just not like, you're not gangbusters, right? You're not that billionaire that's gonna walk down the street tomorrow, and everything's just a good lifestyle. Like you've got everything in place the way you need it to be, and you have protection elsewhere. In that case, you don't necessarily have to carry higher limits on your home or your auto, because if you have other protection elsewhere, then you're good. That's just like the person that has a lot of nest egg that's saved up for emergencies. That's having that larger liability policy or larger protection policy. Just be careful, because you want to talk to the agent, make sure that there's not any overlaps, make sure there's not any exclusions, and then make sure the coverages are correct that meet the requirements of something like an umbrella policy. That's where you can protect your liability without paying an arm and a leg on the auto, on the home, on your motorcycle, on the boat, all of the pieces that you're paying for. You don't have to max everything out, because you can just buy a single policy that will kind of overlap all of them. That's one additional way to save money on your personal auto, home, all of the types of insurance policies that you currently have. Now, what kind of agent wouldn't I be if I didn't tell you the risks? If you're doing any of these things, you are putting yourself at a higher risk of paying out of pocket. That out-of-pocket expense could be large. The odds of you getting in a claim, depending on where you live and who's around you and all of the things, is typically low, right? There's not a ton of claims that if you look at the first 100 people around your neighborhood, Yeah, there's a couple claims here and there, but if you're a good driver, like, we get that, right? You're the good person, but you don't know. You can't predict someone just falling asleep at the wheel and hitting you. Those are the pieces you've got to protect yourself, and making those changes can cost you to pay thousands more out of pocket. If you don't have the right protection, it could be tens, if not hundreds of thousands more. That's why talking to a local agent does make sense, to have them kind of even review and look over what you're carrying to make sure that you are protected correctly. I'll be honest, most of our customers come from other agents that didn't write a policy correctly, and we're like, we can save you money, yes, but this, and this puts you at a huge risk if something happens. Having that trusted advisor makes all the difference in the world. Do be careful with what's called state minimum coverage. That's mostly auto insurance, is when the state requires you to carry certain limits. Although we are seeing states like Virginia, Michigan did it a few years back, and I think Texas is probably looking into it. Florida has raised their state minimum limits because they're realizing that they're too low. There are states that have really low state minimums. Be very careful when you're doing that, because although they are inexpensive and usually don't cost you a ton, they are putting you at a high risk. So having the right fit in the package for you is going to help impact that price that you pay, but also it's going to help you get protected correctly. You really just have to evaluate your situation. Where am I at in life? Where do I plan to go in life? What are my assets? What do I plan to own? Am I planning to be the billionaire that wants to walk down the street? Then yes, I need to have the right protection so that if I cause a claim today, even though I don't have a lot today, I plan on having a lot. So I've got to have at least some protection that I don't lose my income for the rest of my life. That's the scary part of it, and not to put the fear in someone's mind, but that's the possibility. You are at fault in a claim, whether you're picking up a pencil off the floor and you hit somebody and you just don't know, right? It's someone's walking across the street, you were looking to the right, and all of a sudden, boom. Things happen that we don't control, and they're not purposeful. But if something like that does happen, you don't want to pay for it the next 30 years. Or you don't want to have worked for 30 years and pay it back. The next part that you need to think of and focus on is, what coverages should you carry? If you're thinking more auto insurance, I've got my Auto 101 that'll go more in depth. If you're thinking more home, I've got my Home 101 that'll go in depth as well. I'm Mark with Think Insurance. I'll see you in the next one.